Good morning, Bay Area. This is John Payne, the host of Real Estate Radio Bay Area on the Bay Area exclusive home for Fox News Radio, 9:10 a.m. And this is the RateWatch Now Daily Update Report. Happy Wednesday, everyone. Snapshot of yesterday's mortgage-backed securities market. I tell you, we were going along quite well, and then the Fed chair from New York spoke, and here's what happened. And I'll get more on that in a minute. What's going to make rates go up today? Growing concerns about QE2. And this goes back to the Fed chair from New York. He actually spoke a little more than what he should have probably, and he spooked the market. You know, the Fed announcement regarding QE2 isn't due out until November the 3rd. So there's a lot of concerns there. It's really spooking the market. Now, the good news is that we have priced in some bad news already over the last couple of days. And I don't think that it could get a lot worse from here. If on November 3rd, the Fed comes out and speaks of $700 billion or more of QE2, I think that this will cause a rally to better rates. But right now, we are pricing in worse that they are going to not back up what they said they were going to do. New home sales are actually out, and this number is it's better than it was, but it's still way too low. Supply concerns are out. 5-year auction is out today. The 2-year auction went okay yesterday. Now we have a 5-year auction out, and we have an abnormal amount of corporate bonds from several different companies that are being sold today as well. And there's about $2 billion worth. And this is giving us a sign that corporations are saying that it's better to raise debt than sell equities. So what they're thinking is that their stocks are too low, and they think interest rates are near the bottom. Now, that's what they think. I'm not sure if they're correct, but it is something to look at and put a good eye on. The Dow is also suffering from QE2 concerns as well. It is getting hit. And durable goods, this number is out. It's better. But if you were to take out the transportation, now transportation orders are up. These are the big aircrafts that companies need. But if you take it out, durable goods is still way, way too low. Here is a snapshot of home sales. You know, we're down here at the bottom. And it's choppy down here at the bottom. It just can't seem to go up anymore. And you can see we have a long way to go. Even if you went back up to the 600s, where it was lows in 94, we still have a long way to go. Here's how the market has reacted so far this morning. Still concerns of what's going on. Again, that bond auction is going to be somewhat critical as to how well we do today. You can see 51 lenders have repriced for the worst at almost a quarter basis points. Here's what the graph looks like. Second, let's go. Let me talk about yesterday first. We tried to close this gap yesterday. Just couldn't do it. Huge gap down opening this morning. I don't think that because we didn't close the gap yesterday, I don't think we're going to close this gap today. I do think, though, eventually we're going to have to come up and test this trend line. And I think we may test it right around par 40, right around this line. I think actually this may be our new base. It's really hard to tell, and I don't think that anything is really going to come out of this until GDP number is brought out, and I think that's Friday. So until then, you got to keep your eye on some things here. Hopefully you were able to lock up here if you had short-term loans to lock. In summary, Fed speak has overly spooked the market. New home sales are better, but still too low. $35 billion of 5-year sprinkled on top of a spook market causes great concerns in the bond market. Yesterday, 2-year auction was not bad, and we tried to, but failed to close the gap yesterday, the gap down opening. And the market appears oversold, and it may continue until GDP is announced on Friday. That's all I have for you today, Bay Area. Make it a great day. Don't forget, tune in on Saturdays from noon to 1, 9:10 a.m. for Real Estate Radio Bay Area. If you know of anyone that could benefit from this morning update, please pay it forward. Until tomorrow, Bay Area.